Hello, good morning everyone. I am Helda E. Loretti. I am the second reporter of Group 4 and I am here to discuss about the cash disbursement system. But before that, I will discuss first what is cash disbursement system. So, cash disbursement system it is the outflow of cash paid in exchange for the provision of goods and services, and it processes the payment of obligation created in the purchase system. So in a business, it is need a cash disbursement system to handle a company's cash payments efficiently and securely. So the objective of cash disbursement system is to ensure that only valid creditors receive payment and to ensure that the amount paid are timely and correct. So there are four processes of cash disbursements. First is the identify liabilities due. The cash disbursement process begins in the accounts payable department by identifying items that have come due. In each day, the accounts payable clerk reviews the accounts payable file for items due for payment. So second, prepare cash disbursement. The cash disbursements clerk receives a voucher packet and reviews the documents for completeness and clerical accuracy. The clerk, pre- the clerk prepares a check and records the pertinent data in the check register. The negotiable portion of the check is mailed to the supplier, and a copy of it is attached to the voucher packet as proof of payment. The cash disbursement clerk registers and sends a journal voucher with the following journal entry to the General Ledger Department. So the third one is update accounts payable record. So the accounts payable clerk removes the liability by debiting the accounts payable subsidiary account or by recording the check number and payment date in the voucher register. So the voucher packet is filed in the closed voucher file and an account summary is prepared and sent to the general ledger function. So the last one is to post to the general ledger. In receiving of so in receiving so in receiving of journal voucher from cash disbursement and the account summary from accounts payable, and the numbers are reconciled with the accounts payable summary, and the accounts payable control and cash accounts in the general ledger are updated accordingly. So this is the cash disbursement journal, which is called check register. So expenditure cycle control, it is a set of purchasing decisions and actions. So what is the purpose of expenditure cycle control? So the purpose of this control is to maintain order so that the process goes smoothly. So there are six control points of expenditure cycle, which is first is the transaction authorization. So transaction authorizations in the purchasing subsystem, it continually monitors inventory levels and formalizing the authorization process promotes efficient inventory management and ensures the legitimacy of purchase transactions. While in the cash disbursement system, I subsystem, subsystem side, it is the authorization via cash disbursement voucher. So second is the segregation of duties. So in the segregation of duties, there are two types, which is first is the segregation of inventory control from the warehouse. So segregating these two, the firm will have a more concise and accurate record of the asset being released and kept. So the second one is the segregation of the general ledger and accounts payable from from cash disbursements. So by separating these functions, exposure to fraud against the firm will be avoided. So the third one is supervision. So I mean, there are two types of supervision, which is first is the inspection of assets, where clerk must inspect received items for proper quantities and conditions and receive a blind copy of the original purchase order from purchasing to protect the firm from incomplete orders and damaged goods. So the second one is thief of assets. So in the receiving departments are sometimes hectic and cluttered during busy periods. It is essential to keep an eye of their goods to avoid theft. So the fourth one is accounting records. So its objective is to maintain an audit trail adequate for tracing a transaction from its source document to the financial statements. The auditor's concern in the expenditure cycle is that obligations may be materially understated in the financial statements because of unrecorded transactions. So the fifth one is access controls. So there are two types of access, which is the direct access and indirect access. So in the direct access, it is stated there that it includes locks, alarms, and restricted access to areas that contain inventories and cash, while the indirect access, a firm must limit access to documents that control its physical assets. So the last one is the independent verifications, which is two types of verification, which two types of verification. First is the independent verification by accounts payable, and the second one is the general and the second one is the independent verification by the general ledger department. And by the accounts payable, it plays a vital role in the verification of the work of others in the system have done. Eight copies of key source documents flow into this department for review and comparison, which each document contains unique facts about the purchase transactions. And by the independent verification in the General Ledger Department, it verifies that the total obligations recorded equal to the total inventories received and the total deduction in accounts payable equal to the total disbursement of cash. So there are six types of physical system, which is the manual system, inventory control, purchasing department, receiving a accounts payable department, and the last one is the general ledger department. So in the manual system, its purpose is to support the conceptual treatment of systems presented. This will picture out the relationship between organizational units, the segregation of duties, and the information flows essential to operation and effective internal control. And the second one is the inventory control, this which is two types. First one is the purchase requisitions, and the last one is open purchase requisition file. So in the purchase requisition, when an inventory is dropped to a predetermined reorder point, the clerk prepares a purchase requisitions, and one of the copy is sent to the purchasing department and one copy is placed in the open purchase requisition file. So next is the purchasing department. So purchasing department, they receive the purchase requisitions, source them by vendor, and prepare multi-part purchase order for each vendor. Two copies of the purchase order are sent to the vendor. One copy of the purchase order is sent to inventory control, where the clerk files is with the open purchase requisitions, and one copy of the PO is sent to accounts payable for filing in the accounts payable pending file, and one copy is sent to the receiving department where it is filed until the inventories arrive. The clerk files the last copy along with the purchase requisitions in the open PO file. So next is receiving. So in receiving, it prepares a multi-part receiving report stating the quantity and conditions of the inventories. One copy of the receiving report accompanies the physical inventories to the storeroom, and another copy is sent to the purchasing department where the purchasing purchasing clerk reconciles it with the open PO. The clerk closes the open PO by filing the purchase requisitions, the PO and the receiving report in the closed PO files. Next is accounts payable department. So in accounts payable department, clerk reconciles the financial information with the documents in the pending file. It records the transactions in the purchases journal and posts it to the supplier's account in the accounts payable subsidiary ledger. After recording the liability, the accounts payable clerk transfers the source documents to the open vouchers payable file. So the last one is the general ledger department. So it receives a journal voucher from the accounts payable department and an account summary from inventory control. The general ledger clerk reconciles these and posts to the inventory and accounts payable control accounts. With this step, the purchase pay phase of the expenditure cycle is completed. So there are 5 parts of cash disbursement systems, which is first is the AP department, second one is the cash disbursements department, third one is the accounts payable department, and the fourth one is the general ledger department, and the last one is concluding remarks. So in the accounts payable department, clerk reviews the open vouchers payable file for items due and sends the vouchers and supporting documents to the cash disbursements department. So next is the cash disbursements department. Clerk receives the voucher packets and reviews the documents for completeness and clerical accuracy. So each disbursement, the clerk prepares a 3-part check and records the check number, dollar amount, voucher number, and other pertinent data in the clerk register. Along with supporting documents, the checks goes to the cash disbursement department manager or treasurer for his or her signature. Next one is the AP department. Upon receipt of the voucher packet, the accounts payable clerk removes the liability by recording the check number in the voucher register and filing the voucher packet in the closed voucher file. Then, the clerk sends an accounts payable summary to the general ledger department. Next one is the general ledger department. Based on the journal voucher from cash disbursement and the account summary from the accounts payable, the general ledger clerk posts to the general ledger control accounts and files the documents. This concludes the cash disbursement procedures. So next is the concluding remarks. So how manual expenditure cycle systems generate a great deal of paper documentation by buying, preparing, transporting, and filing physical documents add considerably to the cost of system operations. So the purpose of material control is many functions such as the inventory control, purchasing, accounts payable, cash disbursement, and the general ledger are located in physically separate departments. computer-based purchases and cash disbursements applications. So in automating purchases procedures using batch processing, step 1. The step 1 is when inventories are reduced by sales to customers or usage in productions. The system determines if the affected items in the inventory subsidiary file have fallen to their reorder points. A record is created in the open purchase requisition file, so the system sorts the open purchase requisition file by vendor number and consolidates multiple items from the same vendor into a single requisition. Vendor mailing information is referred from the valid vendor file to produce hard copy purchase requisitions documents which go to the purchasing department. Purchasing department upon receipt of the purchase requisition, it prepares a multi-part purchase order. Copies are sent to the vendor, accounts payable, receiving, data processing, and the purchasing department's file. A computer program identifies inventory requirements and prepares traditional purchase requisitions, but the purchasing agents review the requisitions before placing the order. It reduces the risk of placing unnecessary orders with the vendors because of a computer error. Sufficient computer controls are in place to prevent or detect purchasing errors, then more efficient ordering procedures can be implemented. So, data processing department step 2. Receiving department. When the goods arrive from vendors, the receiving clerk prepares a receiving report and sends copies to purchasing, accounts payable, and data processing. So in step 2, a copy of the purchase order is sent to the data processing and used to create a record in the open purchase order file. So the associated requisitions are then transferred from the open purchase requisitions file to the closed purchase requisition file. So, receiving department. When the goods arrive from vendors, the receiving clerk prepares a receiving report and sends copies to the stores with the goods. Purchasing, accounts payable, and data processing. So, in step 3, it creates the receiving report file from data provided by the receiving report documents. The batch program updates the inventory subsidiary file from the receiving report file. The program removes the on orders flag from the updated inventory records and calculates batch totals of inventory receipts, which will later be used in the general ledger update procedure. Then, the associated records in the open purchase order file are transferred to the closed purchase order file. So in accounts payable, when the accounts payable clerk receives the supplier's invoice, he or she reconciles it with the supporting documents that were previously placed on the accounts payable pending file. The clerk then prepares a voucher, files it in the open voucher file, and sends a copy of the voucher to the data processing. So in step 4, voucher file is created from the voucher documents. A batch program validates the voucher records against the valid vendor file and adds them to the voucher register. Open accounts payable subsidiary file, then batch totals are prepared for subsequent posting to the accounts payable control account in the general ledger. So there are three type. I mean, there are three procedures. There are three cash disbursement procedures. First is the data processing department, second is the cash disbursement department, and the last one is the accounts payable department. So in the data processing department, each day the system scans the due date field of the voucher register for items due. Checks are printed and each check is recorded in the checks register. The check number is recorded in the printed in the voucher register to close the voucher and transfer the items to the closed accounts payable file. And in the end of the day, batch totals of open and closed accounts payable, inventory increases, and cash disbursements are posted to the accounts payable control. Inventory control and cash accounts is in the general ledger. So the total of closed accounts payable and cash disbursement should balance. So next is the cash disbursement department. So in the cash disbursement clerk cash disbursement clerk reconciles the checks with the transactions listing and submits the negotiable portion of the checks to management for signing. I mean, submits the negotiable portion of the checks to management for signing. The checks are then mailed to the suppliers. One copy of each check is sent to accounts payable and the other copy is filed in cash disbursements along with the transactions listing. So the last one is the accounts payable department. Upon receipt of the check copies, the accounts payable clerk matches them with open vouchers and transfer these now closed items to the closed voucher file. Then this concludes the expenditure cycle process. Re-engineering the purchases cash disbursement system. So data processing, the following tasks are performed automatically. The first one is the inventory file is searched for items that have fallen to the reorder points. Second is a record is entered in the purchase requisition file for each item to be replenished. The third one is the requisitions are consolidated according to vendor number. The fourth one is vendor mailing information is retrieved from the valid vendor file. So the fifth one is purchase orders are prepared and added to the open PO file. And the last one is the transaction listing of purchase orders is sent to the purchasing department for a review. So in receiving department, when the goods arrive, the receiving clerk accesses the open PO file in real time by entering the PO number taken from the packing slip. The receiving screen prompts the clerk to enter the quantities received for each item on the purchase order. So this is the example of receiving screen. So control implications. The differences between automated and re-engineered systems. So the automated system has the following control implications. The first one is the improved inventory control. The greatest advantage of the automated system over its manual counterpart is improved ability to manage inventory needs. Inventory requirements are detected as they arise and are processed automatically. As a result, the risk of accumulating excessive inventory or of running out of stock are reduced. The next one is better cash management. The automated system promotes effective cash management by scanning the voucher file daily for items due, thus avoiding early payments and missed due dates. In addition, by writing checks automatically, the firm reduces labor costs, saves processing time, and promotes accuracy. So the next one is time lag. A lag exists between the arrival of goods in the receiving department and recording the inventory receipts in the inventory file, depending on the type of sales order system in place. This lag may negatively affect the sales process. When sales clerks do not know the current status of inventory, sales may be lost. So next is purchasing bottleneck. In this automated system, the purchasing department is directly involved in all purchase decisions. For many firms, this creates additional work, which extends the time lag in the ordering process. A vast number of routine purchases could be automated, freeing purchasing agents from routine work, such as preparing purchase orders and mailing them to the vendors. So next is excessive paper documents. The automated system is laden with paper documents. All operations departments create documents which are sent to data processing, and which data processing must then convert to magnetic media. Paper documents Paper documents add costs because they must be purchased, stored, prepared, handled by internal mail carriers, and converted by data processing personnel. Organizations with high volumes of transactions benefit considerably from reducing or eliminating paper documents in their systems. The re the re-engineered system. So in the re-engineered system addresses many of the operational weaknesses associated with the automated system. Specifically, the improvements in the system are: first, it uses real-time procedures and direct access files to shorten the lag time in a record. The second one is it eliminates routine clerical procedures by distributing terminals to user areas. And the last one is it achieves a significant reductions in paper documents by using digital communication between departments and by digitally storing records. So these operational improvements, however, have the following control implications. So the first one is the segregation of duties. So this system removes the physical separation between authorizations and transactions processing. Here, computer programs authorize and process purchase orders as well as authorize and issue checks to vendor. To compensate for these exposures, the system provides management with detailed transactions listings and summary reports. So next is accounting records and access controls. Advanced systems maintain accounting records on digital, digital storage media with little or no hard copy backup. Legislation requires organization management to implement adequate control security measures to protect accounting records from unauthorized access and distractions. So that's all for today. Thank you so much.